You talk about the common. I remember in Prague, you gave a vivid example how MSTR trades as a volatility to Bitcoin, and everybody wants it to trade volatility to Bitcoin. And you gave this example that if God came and spoke to you tonight and told you the market was going to crash tomorrow, and you woke up and hedged your position, and the market crashed, but MicroStrategy didn't go down, that'd be great. And you said no, that wouldn't, because the market expects us to move
Right.
with Bitcoin. And I think you were trying to explain to us during that is that sort of when the company is lean and sort of strips down, it can trade volatility to Bitcoin. And so I'm curious your take on sort of then having like that pure play company versus a company that's like a big underlying business that has a Bitcoin treasury, and how that then maybe potentially takes that common away from really being used like in the ATM, sort of almost neutralizes that part of the tool.
Yeah, so you can have an operating company that has cash flows that uses Bitcoin as a treasury asset. If it's a retailer, if it's a utility company, a power company, a water company, fill in the blank software company. The world's full, every one of the Mag 7 companies. The world's full of companies that have good businesses that generate cash flows, but they have a defective treasury strategy. All of those companies have a treasury which is not generating shareholder value, right? If you take $1 billion and you buy money markets with it, they yield 2% or 3% after tax. And if the S&P is generating 14%, then you've underperformed the cost of capital by 11%. Therefore, your treasury is a cost center, not a profit center for the shareholders. And so what happens is that it shrivels up. The company basically decapitalizes the balance sheet and they give all the money away. And that, it just describes in a nutshell every well-run company in the United States, right? Except Berkshire Hathaway. Everywhere else, like all the Mag 7, what they do is they defund the treasury. So if you're one of those companies, you could just replace money markets with, well, you could replace it with Bitcoin instead, and Bitcoin is 50%, or let's say a reasonable 20-year forecast is 30% if you're a believer, 20% if you're an investor, 10% if you're a skeptic. Right? But whether it's 10 or 20 or 30%, they're all better than 2% or 3%, which is the status quo, right? So if you're in the 20 or 30% camp, it outperforms the hurdle rate, which is the S&P index. And so at that point, the treasury in the balance sheet becomes profit center, which means that you would stop paying dividends, you would stop doing buybacks, you would roll it into Bitcoin, and the company's market cap would grow faster and the stock would grow faster, right? So that's a way to create shareholder value. You won't be better than us. You won't be better than a pure play treasury company, but you'll be better than your peers, right? Like if you're a native business or your organic business is growing 10%, you'll grow 13,
Right.
right? If every other retailer is losing money, you'll make money, right? Um, What we've done is created a pure treasury company. So our risk-free rate, our hurdle rate is 30%. That's what I expect out of Bitcoin over the next 20 years. 29%, but let's call it 30% to round up. So my benchmark rate is 30%. If I put leverage on it, I should be able to grow 50 or 40. I don't think there's any non-financial company, there's no physical company that's gonna actually appreciate at that rate, because you can't do it with real estate or oil or natural gas. The investment cycles are too slow, the development cycles are too slow, the risks are too ineffable, etcetera. So, I would say across thousands of companies, every company ought to recapitalize their balance sheet on Bitcoin, because that will cause them to grow 50% faster than their peers or than they would otherwise. They'll just be better. And that compounds. Yeah, so $1 billion company will be worth $10 billion instead of $2 billion in a decade. Okay. If they were a pure play, they might go from $1 billion to 100 billion. They won't do that, but that's not their bogey, and the truth is they probably can't get political consensus to change their retail or to sell the retail business and become a pure financial company. That's probably not gonna happen. So I just think, it's not a bad idea, but your expectations ought to be adjusted based upon the enterprise value mix, right?
Yeah.
Like, if Microsoft bought $100 billion of Bitcoin tomorrow, 98% of the enterprise value would still be indexed to the software business, right?
Yeah.
If they bought $1 trillion of Bitcoin tomorrow,
Yeah.
they still be 75% indexed to the software business. So you can't get to 100% digital exposure unless you actually start with a clean balance sheet.
Yeah. Starting with a clean balance sheet. So it seems like for the new crop of companies that are starting up, in MicroStrategy, when you raised the convertible debt, then you had the debt to cover. So then there was a lot of questions in the industry about how you cover the debt, what's the underlying business model.
Yeah,
But in sort of the strategy 2.0 version,
skip
I
that.
if you could just go raise $1 billion of Bitcoin and start issuing
If I were
preferreds,
doing it again, I'd raise $1 billion, I'd take the
right?
thing public, and then I'd sell 100 million, 200 million, 300 million worth of preferred stock as soon as possible.
Yep.
And then I would rock back and forth between levering, delevering the thing, and I would grow it with the minimum, most elegant set of credit instruments. Like, if you look at expansions for us right now, Stretch seems like the killer product in the US. Maybe we do the same thing in yen or euros or Canadian or pounds, right? But otherwise, there's nothing else that's all that exciting,
Yeah.
right? I mean, and even those things are much less exciting than just growing the business in the US by a factor of 100.
Yeah. So speaking of that, then in New York, you had talked about the potential to have 1,000 of these companies. Um,
Yeah.
when you think about if it's just as simple as just selling that one product, can there be 1,000 companies selling that one product, or is it that there's going to be 1,000 companies each doing their own variations? Some are like more like insurance companies, some are more like banks. We have 10 major
There's a
banks.
lot of
There's
products.
thousands of regional banks, but there's like
Yeah.
10 major banks.
Yeah. So I think there's huge amount of how many insurance companies are there in the world?
A lot.
How many life insurance companies are there in the world that sell essentially the same exact product?
Right.
Like more than a dozen?
Right. And they're completely different than banks.
Yeah. Yeah. How many car insurance companies, right? How many D&O insurance? How many reinsurance companies? Like, so off the top of my head, products, the obvious ones, you sell treasury credit in every country in the world. Brazil, Argentina. Look, you won't be better than a US company, but you'll be better than every Argentine company, right? The Brazilian treasury company, it won't be as good as the US one, but it'll be better than every country in Brazil. And by the way, in that way, it may become better because if you're the most compelling, fastest growing company in Brazil, then aren't you gonna slurp up all the equity capital and all the credit capital in the entire country?
Right.
Which is like which is interesting. So you can do this, there's place to create, a treasury company in Switzerland. The 26 country is it 26 or 27 countries in the Eurozone? They're all different. There's a German one, a French one, a Swedish one, a Norwegian one. You can do, Netherlands, Belgium, UK, Ireland, Spain, Portugal, Italy, right?
Yeah.
And then Japan, Korea,
Dubai, Abu
China,
Dhabi. Yeah.
China, Kingdom of Saudi Arabia, India, Australia, Canada,
Yeah.
Mexico. Okay. So there, you could just be the first provider of digital credit, right? And maybe you sell kerosene, you sell stretch, but then maybe you also sell long duration credit or convertible credit or whatever. But then I've just broken it down geographically, but then let's come back to the US and break it down by industry sector, right? You could be the one that specializes in insurance or feeding the insurance company, or you could create a credit product that's like a reinsurance product, right? You could create various credit products that are tailored to the life insurance, the annuities, every other type of insurance, flood, casualty, property insurance businesses. Um, there are a lot of buyers in the market, fixed income buyers. They just will not buy prefers no matter what. They'll want to buy bonds. Okay, so I don't want to sell them because it doesn't make sense for me. But if you were saying, Mike, I got $10 billion, I want to compete with you and I want to grow just faster. What niche should I pick? I'm like, well, I'm not going to do 10-year bonds. Why don't you just do what I did, but raise $10 billion and issue $1 billion of bonds? It'll do 144A offerings. Not compete with me. By the way, the market loves them.
Yeah.
Start to do basically over-the-counter institutional bond offerings, and the debate is, do you sell 5-year instruments? I'm gonna sell 5-year, secured bonds, and I'm gonna roll them every quarter. Or I'm gonna say, you could go and do the convertible bond market if you want, or you could do unsecured, or you could do secured. I'm like, "Mike, I found, like, the biggest insurance company in the US, they don't want the preferred, they don't want the converts, but they would take senior debt as long as they've got a claim on the capital for up to 20% of the capital structure or whatever,
Yeah.
and they have $100 billion they'll give me. Do you want it?" I'm like, "No, I don't want it right now. It confuses my story, confuses my investors. It puts credit risk senior to all my other instruments, and that kind of is not good for my capital structure. But should you take it? Absolutely." You could probably take $100 billion. There's probably a $100 billion senior debt thing, $100 billion of junk unsecured. There's $100 billion or $50 billion to take out of the convert market. You could probably write all sorts of custom instruments for the annuity industry, the insurance industry, and guess what? None of that's going to be interesting to the Japanese insurance companies.
Right.
They're going to want different. So when you say, what are all the products? I think the products are, if there's $300 trillion of credit instruments, I think the products are every possible currency, by the way, we can say euro, but French bonds and euros aren't the same as German bonds and euros, right? So it's like every type of currency, every jurisdiction, every type of credit, every flavor of credit. We issued a lot of things that, and then every distribution channel. Do you go public on that exchange? Do you do direct to institutional sales? It's not clear to me, for example, we couldn't do something where we just like rolled 10-year bonds. And this, it's like, how do you handle the credit risk? Well, just every year we'll refinance 10% of them. We'll never have more than 10%. Or maybe I'll just refinance them every quarter and I'll never have more than 2%, 2.5%. So there are other credit products that can be created. There are other buyers. There are investors, right? But then again, there's also corporations that would bypass. So like the pension funds and the insurance companies you could go direct to them and open up a pipe. And then there are all the bond traders and the PIMCOs and the Vanguards and the Fidelities of the world, and indirectly the pension funds and the endowments are behind them, right?
Yeah.
So, you might be able to create the perfect product for an endowment. It's like, well, we like Bitcoin, but we can't stomach the volatility. Can you just give me a 10% guarantee? And then this issue of liquidity, like, well, we would give you $10 billion, but we need the right to redeem 500 million in any given quarter direct from you. Like, I wouldn't do that deal, like for my company, because it's complicating for me. But you might do that deal if the choice was have a $100 billion company and agree to create $500 million in cash on hand, or not,
Right.
right?
Yeah.
And by the way, we haven't explored that, but there's a lot of you could create a quasi money market instrument where you actually, kept 5% of all the capital available for ready redemption on a daily basis. And then you know how funds, they'll create gated redemption windows. Like, you're invested with me for 7 years, but once a quarter you have a 1 day when you can give me you can call. You could put you could put call options and put rights or redemption rights into a preferred stock. I haven't. You could.
Yeah.
It's a different product. Some people like polyester, some people like lycra,
Yeah.
nylon.
Yeah.
Right there. There's a lot of things you can do with carbon, hydrogen, and oxygen.
Yeah. And not everyone's going to want to do all those things. In the US, we have almost 5,000 ETFs that are each just a little flavor of something, right? Thousands of bonds.
And a lot of it's a question of what can you market, more like what can you sell? And what I think there is there'll be a Cambrian explosion in digital credit issuers. And there's a, you're like, well, isn't that a lot of stuff? Well, have you ever studied the mortgage-backed security industry? You know how many things people created? Yeah. I mean, there's hundreds of thousands of credit instruments, maybe millions of credit instruments, and start to go online and figure out every possible twist and turn of every credit instrument. The average person can't even name the top 5 categories
Right.
or top 10 categories. So there's an industry there. The beauty is there's a methodology or a distribution channel to figure out whether your idea is a good one. Like, you create a security and you go and you offer it, and it's a 2-day roadshow or a 1-day roadshow. And the investors are either going to buy $250 million of it in 1 day, or they're going to tell you we don't want any of it. It's very, yeah, so you can create $1 billion product lines in a conversation with the investors in a 144A offering. How many consumer products that are $1 billion can you create in 2 days where you know for certainty it's going to work? Yeah, so I think that the capital markets are primed for innovative digital credit issuers to go and create dozen different interesting, compelling things. Like, you might not come up with the thing they want, but you won't spend more than a few days finding out. And in the real estate business, people create $1 billion building and no one wants to lease it, and it takes 5 years and they lose $1 billion.
Yeah.
That's never going to happen with a digital credit instrument.
Yeah. You can essentially sell it before you build it.
Like, we're literally building it in real time.
Right.
Mark, like, we're open for business every day with 4 credit ATMs. If someone hit the bid and wanted to buy $500 million in a minute, we build the building in a minute,
Yeah.
in 60 seconds. Trade is done. Cash changes hands. We create the collateral. We bought the Bitcoin underlying that day. Sometimes we're literally selling 50 million an hour or 100 million an hour and buying the $100 million of Bitcoin the same hour. Like, we could do $1 billion of capital raising in a day, and we might have 20 million of exposure at 4 p.m. and by 5 or 6 p.m. we're fully done. The investment cycle is 1,000 times faster than technology, real estate, oil and gas, anything else you've ever seen before in your life. And maybe the more profound idea is, think about all these other credit instruments. What's backing corporate credit? What's backing mortgage credit? What's backing bank credit? What's backing all these things? If you sell $1 billion of mortgage-backed securities, who's going to build $1 billion worth of real estate that someone wants to rent? And how long will that take? So this is a profound new idea, and that's why those digital credit issuers can grow so fast.
Man, you'd explained it so well. Hey, if you like this short conversation I just had, you're going to love the full-length conversation. Don't miss it. You can go ahead and click right over here, and I'll see you over there.